Ind AS 33 Earnings per share. Part 1 Basic EPS. Profit or loss attributable to ordinary equity shareholders divided by weighted average number of ordinary equity shares. Profit or loss attributable to ordinary equity shares is taken from income statement EBIT minus interest, which gives EBT minus tax, which gives EAT minus preference dividend, which gives earnings available to equity shareholders. Weighted average number of ordinary equity shares is calculated as follows: opening equity shares plus equity shares issued during the year into days or months divided by 365 days or 12 months minus number of equity shares from buyback days or months divided by 365 days or 12 months. Next, bonus issue issued without consideration. Number of shares before bonus issue multiplied with adjustment factor. Previous year EPS is also restated. Rights issue. Rights issue price less than current market price. Rights issue includes bonus element. Step 1 Adjustment factor. Market price per share divided by theoretical ex-right price. Theoretical ex-right price is current market price into number of current shares plus rights issue price into number of right shares divided by number of current shares plus number of right shares. Step 2 Rights issue after bonus adjustment. This is the full financial year, and if right shares are issued somewhere here, then before issue of right share is calculated as outstanding equity shares before right issue into rights adjustment factor into the rights adjustment factors calculated here into number of months before rights issue from the beginning of financial year divided by 12. After rights issue is calculated as equity shares after rights issue into number of months after rights issue divided by 12, and these two are added. Part 2 Diluted EPS. Profit for basic EPS plus increase in earnings as a result of conversion divided by number of shares for basic EPS plus converted shares. Comparison with basic EPS. Diluted EPS more than basic EPS, then it is anti-dilutive. Diluted EPS is equal to basic EPS. Diluted EPS less than basic EPS, it is dilutive. Potential equity shares, increase in earnings, increase in shares. Convertible preference shares, preference dividend, and converted equity shares are taken. For convertible debentures of bonds, it is interest into 1 minus tax, and increase in shares are converted equity shares. For options and warrants, there is no increase in earnings, and increase in shares are market price minus exercise price divided by market price into equity shares under warrant. Group EPS. Reference to this part is group EPS question in ICI material. Group EPS means EPS in CFS. Subsidiary EPS. Basic EPS is equal to subsidiary profit to equity shareholders minus dividend paid by subsidiary on convertible preference shares divided by subsidiary's ordinary shares outstanding. Diluted EPS. Subsidiary's profit attributable to equity shareholders plus preference dividend divided by subsidiary's ordinary shares plus incremental shares from warrants plus outstanding shares from conversion of convertible preference shares. Consolidated EPS. Basic EPS is equal to parent's profit attributable to ordinary equity shareholders of parent entity plus portion of subsidiary's profit to be included in consolidated basic EPS divided by parent's ordinary shares that are outstanding. Diluted EPS. Parent's profit attributable to ordinary equity shareholders of parent entity plus parent's proportionate interest in subsidiaries diluted earnings attributable to ordinary shares plus parent's proportionate interest in subsidiaries diluted earnings attributable to warrants plus parent's proportionate interest in subsidiaries diluted earnings attributable to convertible preference shares divided by parent's ordinary shares outstanding. Other points from this Ind AS will be discussed in illustrations and test your knowledge summary video. Thank you.